What is going on, guys? Luke here today to examine Cathie Wood's case for Tesla being undervalued. And we will examine the other side who say Tesla is actually in a bubble and talk about some of the potential landmines in arkk case for Tesla to $7,000 per share. But more importantly, can you make a ton of money from Tesla no matter who is right? And no, I'm not talking about options or hedging either. So let's answer that question and more right now. Welcome back, everyone. In this video, we will go over the case for Tesla to $7,000 per share presented by arkk. We'll also cover the case for Tesla being in a bubble and flaws in arkk case. And we will discuss how you can profit huge from it no matter which way this goes, a bubble or $7,000 per share. So regardless of the, maybe crush I have on Cathie, I will keep this objective and leave my non-existent love life out of this. It has no place in investing. And if you agree with that, hit that like button as it really does help the channel, and let's dive into this. The case for Tesla to $7,000 presented by Cathie Wood and arkk. So it's no secret that Cathie Wood and arkk have a really aggressive bull case for Tesla. But unlike many YouTubers out there who, will remain nameless, they actually have put in the work and justified their price targets with actual data and analysis. Not just a pie-in-the-sky clickbait valuation based on flawed logic and analysis like,
if Tesla 10x this year and it keeps the same revenue growth next year, the stock will 10x next year and be worth $20,000 per share.
Yes, because revenue and stock price rise proportionately. Sorry, that is almost as bad as the guy who says Tesla's price target is $87 per share. Really, dude? Okay, sorry, back on topic here. I don't want to get bogged down too much into the details of arkk case as, we all know it pretty well. But answer these questions for me. Is there any doubt that Tesla has the best EV in the market and it's not even close? Is there any doubt that Tesla is at least 3 to 5 years ahead at a minimum from everyone else and their lead is growing each year? Is there another automaker who has so many projects not related to autos like, solar panels and energy trading and software, insurance and all that good stuff that have huge potential for future revenue? Is there any doubt that Tesla is expanding their infrastructure to accommodate massive growth in every part of their business? When you add in all these factors, it's easy to see explosive growth for Tesla coming in the future, especially as EV adoption continues. They will continue to be more efficient and drive down costs, and some of the other lines of business will actually grow. So as you can see, arkk has shown a pretty clear path to reach the $7,000 per share price target that they set for Tesla. So let's go over the case for a bubble, and we'll talk about some flaws with arkk case. Now before you get all riled up and run down to the comments, let's all try to be objective here, put our secret crushes aside for just a second, and point out some of the less favorable things in arkk case that actually show why Tesla could be in a bubble. Now, not everything Tesla is doing will be a hit. I'm sorry, they have had some failures as well, and many of ARK's projections involve pretty rosy estimates and assumptions. The biggest flaw I see in the logic to $7,000, and we have talked about it before on this channel, and that is regulation. I actually think that's the biggest hurdle to autonomy, period. I know that isn't part of their case to $7,000 per share, but it's worth mentioning considering other assumptions, such as EV adoption rates, and others are based on growth in states and countries where regulation favors what Tesla is doing. But those are the easy targets that Tesla is taking down. Getting regulation changed in other areas and seeing those same adoption rates is going to be much harder and will take much longer than ARKK is suggesting. Now, I'm not saying Tesla will not continue to grow or get there, but the growth rate may not be as high as ARKK has predicted. So that leads me to revenue. Tesla does not and will not have the revenue for at least the next year, maybe 2 years, to justify its current valuation. Even with a ridiculously high growth rate, it is very hard to see this catching up. Look at its PE ratio right now. it's 1,036. And I agree completely. Comparing it to other automakers' PE ratios, which tend to hover around 14, 15 or so, is just ridiculous because Tesla is so much more. So let's take a look at Apple. I hear the Apple comparison all the time, who is now trading at all-time highs and considered very rich right now. And their PE ratio is 38. Yes, 38 versus 1,036. Well, let's look at another stock that is always traded at an overvalued mark per se, and many investors never jumped in on it due to its high valuation. It just never justified its valuation. And that would be Amazon. And it's currently trading at around all-time highs too, but its PE ratio is only 127. So Tesla is literally trading at almost 10 times that of Amazon, which is trading at all-time highs right now. And basing a value on growth that hasn't happened and won't happen for 3 to 5 years at a minimum, if not more, is not normal and may not be sustainable. And right now, it's only $2,000 per share, not $7,000 per share. Looking at it from that perspective, it will be incredibly hard for them to have the revenue to even remotely justify the high valuation in 4 to 5 years in the ARK Invest case at $7,000 per share. Now remember, ARK Invest is the exception on valuations. It's not the rule. And it would not surprise me to see big money pull out and take some massive profits that are sitting out there and wait for the revenue to catch up some before buying in again. And if they do decide the valuation is too rich, a bubble popping is exactly what will happen. So how can you profit huge from it all no matter what? A bubble or Tesla to $7,000 per share? Now remember, this is my opinion and for entertainment purposes only. Do not listen to me. Now despite the fact that a stock bubble and Tesla to $7,000 per share being pretty much polar opposite positions, there is a way to play this where you can make huge profits regardless of which way this falls in the end. And remember, I'm not talking about hedging or options or other strategies like that. Yes, those can be used effectively. It's just not how I like to trade, and I know a lot of you are new investors, and messing with those will get you burned eventually if you do not know what you're doing. So let's knock the easy one out of the way first. If you own Tesla stock right now, today, or you buy it today, tomorrow, or anytime soon, you stand to profit huge if it runs up to $7,000 per share. That is just simple math, even for a public school kid like me. But if Tesla is in a bubble and that bubble burst, how do you make money if you aren't shorting the stock or something else like that? That is where you need to shift your thinking and your plan and goals for the stock if a bubble pop would destroy you. Think about where Tesla is right now, around $2,000 per share, right? I think in a bubble scenario, Tesla would fall down to somewhere between $1,000 and $1,300 per share, worst case. Now, if there was an accounting scandal or something like that, just bail and run and take whatever you can and get out. Just look at Luckin Coffee for an example of what happens there. Now, if Tesla is in a bubble and we have a meltdown in the overall market like we had in March, I really don't think sub 1,000 is out of the question at all.
But Luke, I just lost all of my money.
That is where you are wrong, my friend. You only lose if you bail out and sell. If you are buying Tesla because you believe in Tesla long term, then a bubble or even an overall market crash should have no effect on your stance on the stock. And here's why. When you bought Tesla stock, what price did you think it would go to? My guess is most of you thought, 3,000, 5,000. I know some of you even believe in the extreme bull case of 20,000, but we all had an expectation of the stock being a lot higher than it is right now in the future. So has there ever been a stock that over the course of 5 or 10 years has just gone up in a straight line? No, of course not. There will be ups and downs, and dare I say, bubbles along the way. Let me give you an example, and a recent example. When Apple hit an all-time high of $225 in 2018 and was the first US company to hit $1 trillion in market cap, the bubble popped. And not because of a virus or something like that, it just popped for Apple. Fell to $140. Or, it lost around 40%, but look at Apple today. Just 2 years later, it's over $500 per share It's the first US company to $2 trillion, if I could say $2 trillion of market cap, with a way better balance sheet to help line up the valuation. And remember, this is a very mature Apple. Tesla still has legs to run at a much greater rate than Apple does. So if you take the appropriate time horizon with Tesla and hold it long term, and most importantly, you don't sell on the ride up regardless of whether it's a bump in the road or a big bump in the road, there is no way you do not make massive profits in the end, regardless of whether the bubble pops or it just runs all the way up to $7,000 per share. And if you want to work directly with me as I show you how to create a plan, set defined goals, show you how to analyze a stock and build real wealth, check out the first link down in the description where I will teach you my method for all those things and more. And show your support for the channel by liking the video. And follow me on all my social medias I have so you can watch me epically fail on all those. And don't forget to sign up for Webull and get your 2 free stocks when you deposit $100 with them. But I think it's going to be a crazy next few weeks. So make sure you're subscribed, which you can do right there, so you can get the truth and all the craziness. And here are some videos about Tesla that'll give you a better feel for Tesla and, quite frankly, about my channel. Thanks.